morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, August 6, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security transaction. Options University provides educational services that are meant to teach you the risks and the rewards of trading stocks and options. And we're not a service that tells you what to trade. We are not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. With that, let's go ahead and take a look at the economic announcements taking place during this next week. As we see, Bernanke speaks at 9 o'clock, probably not going to move the market. We don't see a whole lot going on for the rest of the day. Looking at Tuesday, we see just about the same amount we see going on Monday. Looking at Wednesday, not a whole lot of things that are going to change the market there. On Thursday, we've got jobless claims at 8:30, which is before the market opens, and that certainly has been known to move the market. So we could see some numbers out there that could give us quite a change in attitude in the stock market. And then finally on Friday, we've got Treasury budget and import and export prices, neither one of which is going to move the market a whole lot. So with that, let's go ahead and move on to the next slide. And we're talking about the SPX. S&P 500 is our kind of index because it tells us what all the greatest companies in the world are currently doing. We see that as we look at this, we have an uptrend in place. We're going higher. All right, and we see that we're getting higher lows. There's a low, there's a low, there's a low. This one this week on Thursday hit the moving average, bounced, gave us a nice sized tail there. And then what we saw on Friday was unbelievable. The market basically crashed up. We're getting higher highs as we look at this. There's a high, a higher high, and certainly a higher high. So if we did continue in the trend, we would expect that we're going to break above this current high. So with that thought in mind, let's go ahead and take a look at the closer chart of the same thing. And we see here's Monday, Tuesday, Wednesday, and Thursday. We were headed down. It didn't feel good, didn't feel comfortable, and then all of a sudden it hits the 30-day right there. And then whoop we go. Friday is a day to be reckoned with. And so we basically are ready to go to look at the next week, and we'll see exactly what's going to happen as this week develops. But that almost looks like a crash up as the market moved on a huge candlestick on Friday. All right, with that, let's take care of a look at the Dow, see if it basically did the same thing. And we see, yes, it is. The Dow also is in an uptrend. It's getting higher lows and it's getting higher highs. It has finally broken out of that zone twice and is providing for us some volatility there. It's twice that it's broken out of this zone. We call that a double top. Expectations are that we may see a pullback. Maybe have a little gap up on Monday morning and then watch this thing begin to pull back. If it continues its current trend, we can extend this moving average out further and extend these candlesticks down further, like so. And that's probably what we could expect to see. We may not see that, but if it does, don't be shocked by it. And then what we'll do is get another bounce off that as we head higher as the ticker turns. Looking at the NASDAQ, we see the NASDAQ still trading within its normal trading range for the summer and really hasn't changed anything since it came here. All right, so we see that the NASDAQ just going sideways, going nowhere. Certainly could be a candidate for one of your go no place strategies. Iron Condor or something along those lines. All right, with the next, let's take a look at the next company, the Russell 2000, and we see, look at that, lower highs as this thing just is underperforming the other indexes. And then we look across here and we see we have a symmetrical triangle. We'll see which way this thing bounces as time goes on. All right, let's take a look at the week that was, and as we look at it, we see, wow, change. Every single one of them up except for the Russell. Russell leading, lagging, having a hard time to get up. How much was it up? Well, it all took place on Friday, but it's 0.2% on the Dow, 0.3 on the NASDAQ, 0.4 on the S&P 500, and look at that. We got two of them in double digits now, as both the S&P and the NASDAQ are in double digits for the year to date. All right, so, not bad numbers when you look at them, and they were certainly willing to bounce back on Friday in order to give us a positive week in the market. Okay, let's take a look at the VIX. We see, of course, as the market pops up, what happens to the fear? It goes down. We're sitting at the bottom of the normal range on the VIX, as the VIX should be ready to bounce up. How much lower will it get? Looking at the bonds, we see that the bonds have pulled back a little bit as the market kicked in. But notice that we've been pretty much trading in this range since basically around June 1st. So the bonds as they currently sit certainly have performed, but they're going not very far at this particular point. The financials, no market moves up healthily without having the financials follow. And we look at XLF, which is our exchange traded fund for the financials, where we can exchange a couple hundred companies rather than just one company, and all for the price of an admission to the swimming pool. All right, so with that thought, here we are sitting very near resistance, and the financials, will they break out or will they retrace, come back down, and head toward those moving averages? Time will tell, but look at there. And there it is, and good chance it could come just like that. Hard to say. We will have to observe to see what's happening. As we look at oil, we see we've gotten a couple of shots above the normal trade range, as oil just keeps plugging along, going no place for the summer, except up at the gas pumps, as I'm sure you noticed. Looking at gold, we see that gold again is on a run, up around 139.34. That's the spider. This is the spider. This is a wrong chart. So this is not the gold chart. This is the spider chart. And as we take a look at the SPY, we see that the SPY has broke out very much like the S&P did, which mimics. See, we got the bounce off the 30-day moving average. We actually ended up in the top half as we broke out into new territory, and we'll see if we'll continue on. Notice if we look at the volume down here on that big Friday day, the spinning top, which bounced off the 30-day moving average, had nice volume, better than 1.5 times. But when we look at the next day, which was Friday, we did it on basically about average volume, as we had a complete reversal and an addition to the pivot in our overall market. With that thought, let's take a look at that. We already did. And so, folks, that's the week that was and the week that's to come. We had a decent week in the market. Most of it took place on Friday as far as the gains for you bulls. And if you're nimble and quick, that's when you get to pull money out of the market. We're going to have our list of stocks to go through with our gold members. And so for those of you that are not gold members, thank you for being here. And the very thought that you would take your time to spend with Options University is very much appreciated. So with that, this is Butch Shorrock. It's Options University. It's Monday. It's August 6th, 2012. Thank you again for being here. To our gold members, welcome back. And it's Monday, August 6th, 2012. And as we take a look and see what happened last week, let's go ahead and click to the next slide. And we see that we blew through quite a few levels of resistance, all on one day, all on Friday. So we are currently in an up cycle. The air should be getting a little thin up here. We may have a little more to the upside, but my expectations are that we can then start heading back down heading towards that 30-day moving average as we're in an uptrend. And the thing is, we are a news-driven market currently, and so we'll see where the news is going to drive it, whether it's good news or whether it's bad news. We'll be able to tell because the market certainly understands that news is what's driving it this time. As we looked at these earnings so far that have been coming out, bottom line earnings, that is, the profits have been extremely well done. The CEOs have been handling their companies quite well. But what we have been seeing is we've been seeing that the top line, that is their revenues, the amount of money they're taking in, have left something to be desired. Let's take a look at Amazon, see what it looks like relative to the S&P, and we see that we had our retracement, came back down, didn't even get to the 30-day moving average, showing relative strength the overall market. And in one day, it's broken out of its range and ready to head for new highs. Amazon certainly has shown good relative strength since not since the latest earnings, but from the earnings before, as it held its own during some of those pullbacks in the market. Apple had earnings. Earnings were not well received, but notice we have come back and gone back and gotten to the top of this trading range. And now the only question is Apple going higher? It kind of bucked the trend this week as it kept going up as the market was trending down. And then we see that it finally did have a little bit of a pullback on Thursday. Friday, as the market popped up, so did Apple. And watch for a breakout with volume. If you get a breakout out of this zone that we've been in for the last 3 months with volume, you may want to ride that horse, Apple, and ride it and take some profits out of the market on it. All right, AutoZone. Well, AutoZone really hasn't been performing. We've been pulling back. Look at that big day pull back on Wednesday. And then we see we do have a little bounce off that 200-day moving average, but that is not a bullish candlestick. Not in any way, shape, or form. So if we get a bounce, AutoZone may rise, but it looks like if we get a pullback, AutoZone may be going back and reattaching and reattacking that 200-day moving average. CMG, not a happy camper, got nailed by earnings, and has been spending its time going absolutely nowhere. So we'll see whether CMG can pick up any of its prior greatness that it had all last year and the beginning of this year. But it's a different company now, so watch for bounces, and you may be able to take some money out on the short side on CMG going forward for the rest of this next era that it's in. Looking at Google, we see Google break out, and we see Google breaking up around 641, and certainly has shown some good strength. Even as the market was pulling back this week, Google was holding its own, going sideways, and finally got a nice gap up today as Google showed us that it can go back to its former greatness. We do have a shareholder lawsuit coming up on this in October or November. We'll see what happens as that develops. Finally got some news out of Green Mountain, and it was positive out of earnings, and we saw it's responding appropriately. If we do pull back a little bit here, and you get a chance to get long on on Green Mountain, because it definitely did that on big volume. So there was interest in this company as they had their great earnings announcement. ISRG, we see that ISRG is in a trading range, not moving any place, sitting below the 200-day moving average. So we'll have to see whether ISRG wants to return to some of its former greatness. MasterCard, kind of not participating. Didn't really like the earnings. Kind of interesting. And we see as the market pulled back during the last 4 days, so did MasterCard, sitting currently above that 50-day moving average at this point. And we see that there is potential to the upside, but notice that we're not getting any big, strong candlestick out of this that we got out of the rest of the market as we had that huge Friday. So MasterCard lagging a little bit at this particular time after earnings. McDonald's pretty much back in that same trading range, and we'll see if it can continue to go up with the overall market, but it really seems to be going not much of any place. McDonald's doesn't have any great interest if you're a bull or a bear. What if you just want to make money and it doesn't have to go anyplace? You might think about McDonald's. Nike going sideways, 3-month chart that we're looking at, but we see that this had run all last year, but it is not running at this point, having a tough time with this inverted moving averages that we have. There's the 200, there's the 50, and there's the 30. And so what we're really talking about is a downward trending stock. Good deal of sideways support to it, but all in all, it isn't what it used to be. Price line running into earnings? Could be. Any cooperation out of the market on Monday? We could see this head up higher and even break out of that current traded zone. Finally, W. Grainger showing us that kind of strength, which was exemplified after earnings as we saw this big candlestick with big volume, and we see being supported by the industry and being supported by the investors, as this is the kind of news Wall Street likes, and we see that it pulled back with the overall market, but is now headed back up, and watch for a breakout on this. That potential is there on W. Grainger. Could head higher. So with that thought, here we are in the doldrums of August. Not such a doldrum month. Got some conflicting stories coming at us. We know that typically for the S&P and the Dow, that this month is really a bad month for the overall market. However, we also know that you got a conflict with that, because in election years, August actually can be a great month. But then you got to ask yourself, is this a normal election? Where are we going? What are we doing? So we'll see as the ticker turns. This is Butch Shorak for Options University. It's Monday, August 6, 2012. Trade what you see, not what you think. That's what gives us our edge. Thank you.